please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Now, the government's move to set up a high-powered group of Indian automakers to boost its Make in India campaign has exposed deep cracks within the auto industry. CNBC TV18 learns and reports that while Tata Motors, Mahindra and Mahindra, Ashok Leyland, Hero Motocorp as well as Force Motors have been included in the group, which is India's largest car maker, Maruti Suzuki has not, and that has Maruti feeling slighted. Let's listen in.
I don't think there is any country, this is my belief, I don't think there is any country in the world where there is no cap on royalty. That means you can send whatever amount outside. If that is the case, then what is the incentive for foreign OEMs to do engineering in India?
My thinking on royalty is that government should not put any caps, that the market conditions and the need to be competitive will force the parent company and the Indian subsidiary or licensee or JV partner or whatever it is to make cars which are expensive, which are competitive in the market.
8 years after the government relaxed royalty norms for foreign companies, the issue is back in focus. In the process, it has driven a deep wedge into the auto industry. A high-powered group of Indian automakers set up by the government has come out strongly in support of reintroducing a cap on royalty. This is being positioned as a way to incentivize foreign companies to invest more in design and engineering work in India. But Maruti Suzuki, which has not been made a part of this group and pays almost 6% of its net sales in royalty to Japanese parent Suzuki, feels any move in that direction will have the opposite effect.
The government does not intend to go back to 1991 kind of situation. This committee seems to me to be somewhat out of tune with what I understand of government policy. Because government policy seems to be very clearly in favor of inviting foreign direct investment, foreign technology, so that with that investment and technology, more products can be made in India, supplied not only to the Indian market but exported out of India.
Maruti says that the creation of a forum of just Indian auto companies runs counter to Prime Minister Modi's Make in India campaign, which is pillared on inviting more foreign investments into the country.
If you're talking of Make in India, as you just said, Maruti and Hyundai make more than 2/3 of the cars in India. And if you take the other foreign companies in India, including GM and Ford and Renault, then it's much more than that. The three companies you mentioned, only 2 of them make cars. And together, they may be what, about 10% of the market?
This may be a dig at M&M and Tata Motors, which are members of the select group that has shared ideas on capping royalty. But Ashok Leyland, which is also a member of the group, has said that deciding on the composition of such a group is the government's prerogative. This is not the first time the industry has found itself split down the middle, but this is surely the first time this division is taking place in the form of a Swadeshi versus Videshi debate. In New Delhi, Ronojoy, Banerjee.
Okay, thank you, Ronojoy, for that. But staying with the auto sector then, 2017 was a year full of challenges for the Indian business, especially the auto sector. The Motown witnessed the rollout of BS4 norms and also braved the impact of demonetization and GST. So how did the Indian auto manufacturers fare this year? Utkarsh Chaturvedi joins us with the report card. Utkarsh, tell us what about what happened in the auto sector this year? What are the auto stars and the laggards of 2017?
Speaking about two-wheelers in this presentation and the whole financial year, what we have been speaking about is how Honda is inching closer. So we really deep dived into the numbers and the kind of things we really got from this. One was that Honda is inching closer, gaining market share, but Hero's market share remains intact. So who's losing market share here? What we found out is that Bajaj has lost a lot of market share in this financial year. Now, let me take you through the numbers, first of all, in the whole domestic sales of two-wheelers. Now, you look at Hero Motocorp. The market share remains the same, 36.56, 36.23. Honda Motor, on the other hand, is inching closer from 20 26.36 from 29.12. And if you see at Bajaj Auto, that is what I was telling you about. That's from 11.77, the whole market share is 9.89. Now let's break this up into motorcycles and scooters. Let's look at motorcycles. Hero Motocorp retains the above 50% market share. In fact, has grown from 50.35 to 51.28. Bajaj Auto, on the other hand, from 18.6 has come down to 15.91. Now, that's a drop of somewhere around 2%. And that is what Honda has taken from 14.3 to 15.67. TVS Motors remains flat. Royal Enfield, a very small player when it comes to the larger picture. But remember that they play in a niche segment. And despite playing such a niche segment, getting those 6% is a huge thing for Royal Enfield. Now let's talk about the scooter industry. Now scooter industry is what, taking Honda forward. Now here as well, there's a different story. Honda has not really gained market share there. They have in fact lost some 7 basis points. But the story here is that Hero Motocorp, who started promisingly with the pleasure last financial year and had got some 14.73% market share, is down to 12.92. And who has gained here is the TVS Motors with its Jupiter, which is doing really well. So you can see the 13.93 market share is now 16.01. Now let's break the motorcycles into two segments. The commuter segment, which is below 125cc. This is what is the bread and butter for Hero Motocorp. Now look at the market share there, 65.11 to 65.89. So the dominance of Hero Motocorp in the commuter segment continues. Honda Motors, despite trying a lot, despite a lot of attempts by the Dream series, has not really been able to take the market share up from 15.65 to 16.24. Bajaj Auto has kept that market share consistent, and TVS Motors has lost some market share. Let's speak about the above 125cc market. This is where Bajaj Auto continues the dominance, 36.72, but has lost market share to 31.20. Royal Enfield gaining market share by 4 points. Honda Motorcycles gaining market share by 4%. Hero Motocorp really a laggard here from 3.19% to 3%. And now let's finally speak about the exports. Now the export market is also something which has been tracked closely, and Bajaj has been leading from the front. Now look at the numbers, 9.20 lakhs and a Y-on-Y growth of 10%. But the others are really catching up. Now look at TVS Motors there, 3.14 lakh, 29% increase. Honda Motors again a 29% increase. Hero Motocorp, despite all its tries, has not yet been able to capture the global market, a 4% ride and 1.15 lakhs. So clearly this year it looks difficult for Honda to really get to that #1 position. We'll have to wait for the next financial year, it seems like.
All right, Utkarsh, thanks a lot for that, telling data that. But let's move on. Market regulator SEBI, they've intensified the probe into unpublished financial information case. Sources say the market regulator has conducted searches on more than 40 brokers and analysts across several cities. Yash Jain, he's been tracking this story very closely, been on top, and has more details now. Good morning, Yash. What more are you gathering?
Good morning, Manglam. So, as you rightly pointed out, a major crackdown on circulation of unpublished financial information through WhatsApp groups. Market regulator SEBI has conducted search operations on more than 40 individuals, which we understand include brokers, analysts, and people directly or indirectly related to these companies. Now, these search operations are conducted in Mumbai, Delhi, Bengaluru, but most of them are happening in Mumbai and were being conducted in assistance with the city police. Also, what we're given to understand is that market regulator SEBI has seized physical documents, laptops, hard disks, and also various other storage devices, and they are investigating on what was stored and what was shared through these devices. One problem going ahead, which a lot of sources in the market regulator SEBI are pointing out, is that a lot of messages which were sent were encrypted. So there is a possibility that SEBI could get in touch with telecom regulatory body TRAI to get them decrypted these messages and carry on the investigation further.
Well, Pidilite will be in focus today. The company's board will meet today to consider a buyback proposal. Manglam, what can we expect of this meeting and how would this impact the shareholding and the investors?
I'll tell you, Anisha, so the thing is that today is the board meeting. The announcement came on the 20th of this month itself. So if you take a look at the 7-day chart, Pidilite, the stock has already moved from about 880 rupees to just about 945 rupees. So 8% moves in that. 1 month, the stock has moved about 12%. So a large part of it is factored in the price, and as the price goes higher, the worse it is for the company, because they will be buying their own stock at higher valuation. So yes, the board will meet today, but as of September 2017, the consolidated net worth is close to 3,700 crores. Now there are two ways a board can do a buyback. One is with the board approval, which is 10%, that could be around 366 crores. Or the second is if they go ahead and take shareholders approval and do up to 25% of the net worth that is flashing on your screen right now. So 25% of 3658 crores would be close to around 915 crore rupees. So the market cap of Pidilite as we speak is closer to that 50,000 crore rupee mark, and promoters own 70% stake in the company. So even if they do go ahead and borrow about buy back about 366 crore or 915 crores, we need to know whether the promoters are participating or not. If promoters are participating, acceptance ratio is just about 0.8%. This is with the board approval, 2% with the shareholders approval. If promoters do not participate, then the retail investors, 30% of them they have a higher chance of their shares being accepted. So acceptance ratio then will be 2.6% with the board approval and 6.6% with the shareholders approval. Does Pidilite have the money to do that? Of course they do. The current investments are close to around 1,500 crores, cash and bank balance close to about 153 crores. The larger point, Pidilite at this point in time thinks that their investment, their company is the best investment opportunity that they have. So that's as far as Pidilite is concerned. They bind things together. But one sticky issue is the H-1B visa, Anisha. You know, we've been talking about this, but now we understand that the Trump administration has been mulling to make the norms tougher. What's the update there?
Well, yes, looks like life is going to be even more difficult for the IT companies. They have been troubled by this H-1B issue for the last couple of years, and it looks like things are going to get tougher if this particular proposal passes. Now, what the news is that Department of Homeland Security is looking to further strengthen and make the security procedures even tougher for getting the H-1B visa. So, Department of Homeland Security is likely to revive a 2011 proposed rule that requires H-1B petitioners to pre-register for the H-1B cap lottery. And it also suggests that companies will now first have to get their cap limits and only then apply to submit the petitions as far as the cap limit is concerned. This also means that they are looking to give priority to the people who are highly paid and highly skilled. That means the margins for the Indian companies might even skim through, because remember, there was a bit of cost differential when they used to come to the domestic US employee versus the Indian employee. And if now they are going to favor an employee which is highly paid, even in terms of a person coming from abroad, that means that gap would narrow down. Other than that, another thing is that there was some news that H-1B visa holders' spouses may no longer be allowed to work in the US. So that is an added pressure as far as that is concerned. But clearly this news coming in that they are going to make the norms stricter. They would look at the cap limits most in a better way, etc. And they're going to give priority to the most highly paid employee is something that might just irk the IT companies today.
All right, Anisha, we'll keep an eye out on that. So if you're a citizen looking to go to the US on an H-1B visa, make sure you're highly paid. And if you're a company looking to send in employees, make sure they are highly paid. And that will hurt their margins. We'll keep an eye out on that. But now the stage is set for the swearing in of Vijay Rupani as the Gujarat Chief Minister today. Prime Minister Narendra Modi, the BJP President Amit Shah, and Chief Ministers of 18 BJP-ruled states will be present at the grand ceremony. The BJP clinched to power for the 6th term after securing a majority of 99 seats in 182 member state assembly elections in Gujarat. Rupani and his deputy Nitin Patel will be heading the state for the 2nd straight term.
Okay, a special CBI court in Ranchi gave its verdict on Saturday in a fodder scam case in which former Bihar Chief Minister Lalu Yadav was an accused. He has been found guilty and was taken into custody soon after the verdict. The sentencing will be on January 3rd. The case relates to embezzling of more than 69 lakh of rupees from the Deoghar treasury between 1991 and 1994. The Rashtriya Janata Dal chief has already been convicted in another fodder scam case that cost him his Lok Sabha seat and disqualified him from contesting elections.
Okay, then let's move on. Reliance, which is India's biggest company, to be among the top 20 companies in the world. Mukesh Ambani outlines his vision for Reliance Industries on its 40th anniversary at a star-studded family day. Over 50,000 people packed into one stadium in Navi Mumbai, celebrating 40 years of one of India's most iconic companies. Another 2 lakh plus connected by live conferencing from the 1,200 locations globally, making it one of the largest employee outreach programs by any Indian company. The theme of the function, Kal, Aaj aur Kal, honouring those who walked with Dhirubhai Ambani to fulfill his vision. A tribute paid by none other than superstar Amitabh Bachchan, who revealed little-known facts of his links with Dhirubhai.
For me, it has been a privilege to lead Reliance. There cannot be a better celebration of our 40 years than to be with my entire Reliance family of over 250,000 people in its full spirit and glory all together. Reliance is a global leader in energy and materials, where operating safely is an obsession. And with Jio and retail, where we have established leadership position in India, we are customer obsessed. As we enter our golden decade, we at Reliance are in a unique position to accomplish what very few companies in the world can even dream of. And I have no doubt that the next generation of Reliance will make it a reality.
Look at the Asian markets. Remember, the Hang Seng Index is shut on account of the holidays. So we're getting in rates from Shanghai, and that one's opened with a pop of 0.4%. Remember, that index was down about 0.5% in yesterday's trading session. So some pairing of losses seen there, absolutely on the flat line for this week itself. The Nikkei, which was opened with a cut of close to about 0.2%, has now still maintained that cut of close to around 20-21 points. The Korean markets, not much has changed there. It was sitting with a gain of 0.2%, and that's where it is as we speak. The most important one for our markets, though, is the SGX Nifty. Indicated a start at the flat line, and that one's declined a tad bit. The SGX Nifty should come up for you, indicating a cut of close to 20 points. But remember, this compares with the Nifty futures, and the Nifty futures is still holding above that 10,500 mark, where the maximum open interest in index calls are. But we'll keep an eye out on that. As of now, the SGX Nifty indicating a 20-point downtick.
Okay, Manglam, thank you for that. But Manisha Gupta joins us now with the update from the commodity space. Manisha, good morning. Tell us what is happening in the world of commodities.
Well, it is a very, thinning volume trade that we are looking at today. As you were mentioning, some of the markets in Asia are shut. The UK markets are shut today as well. So you are looking at exaggerated moves. So gold price is trading at a 2-week highs in a thin volume. The US dollar is trading very steady. We have seen a decline in the dollar, not just in the previous week, but this year actually is the worst dollar performance that you have seen come in 14 years, and that has been supportive for commodities. The metal space has opened slightly on the higher side, but remember, it's only Shanghai and the New York markets trading. The major market, LME, is not working today. In Shanghai, you have seen some support come in. If you look at the S&P Metal and Mining Index, that is up 13% in last 1 month. So the metal support has been there. Steel prices today are trading at a 2-month highs. This is winter. The low temperatures make the construction difficult. Smelting also is difficult. So that, of course, has been supportive for the prices. Even the copper prices have started Shanghai nearly a 2-month highs. But as I said, the volumes are not going to be enough to sustain these price rises, is what the markets are seeing it as. And as you go over, the crude oil prices also have started Asia on a positive note. There are statements from the oil producers in the Middle East talking about balancing perhaps happening in this the first quarter of 2018 itself. We have seen strong support come in for prices. The output cuts have yielded results in sense of 15% gains that we have seen in crude in this year, and that support is expected to go on. So even as we are into the last week of this year, we have started the week on a positive note, and that's majorly because of the weakness in dollars.
All right, Manisha, thanks a lot for that. We'll watch out for all the cues come by in the last week of 2017, but let's watch out for the F&O cues. Remember, this is the expiry week which has begun, and early rollovers have come in too. As far as Friday's trading session is concerned, FIS, they sold about 500 crores in index futures as we moved higher. The Nifty premium too came down, but that is on account of the time to expiry which has come down and the 3-day weekend. So rollovers so far at 31% have been higher, primarily because of the FIIs who are majorly on leave this week, so decided to roll over their positions earlier. The interesting data came in from the index options, bought about 800 crores in index options, and out there was a lot of short covering in index calls. Remember, the 10,500 call has the maximum open interest, and as the markets moved higher, we saw those calls running for cover, and as those calls were running for cover, we also saw some additions in long positions in index calls and some short positions in index puts. So overall, bullish data coming in from the index options perspective, notwithstanding the put call ratio, which is closer to that 1.6 mark, slightly elevated, but nothing to suggest that it may not sustain. 10,450 put, that one saw a lot more writing, 10 lakh shares added in open interest. So put writers going higher as we speak. The 10,500 put to continue to see some writing, 7.5 lakh shares added out there as well for a premium of 50 rupees, indicating that at lower levels, 10,450 will hold good for our markets. The 10,400 call writers, they ran for cover, close to 10 lakh shares were covered out there, and the 10,500 call, which still has the maximum open interest, that is the level which perhaps both the bulls and the bears will be fighting for. The Nifty futures, remember, is above that 10,500 mark. We'll watch out for that. Watch out for a couple of stocks as well. HDIL, Jet Airways, as well as JSW Energy, all of them are out of the F&O ban after a decent kind of stock move on Friday's trading session. So we'll watch out for that.
Okay, Manglam, thank you for getting us all the cues from the derivatives market. But with that, it's a wrap on Power Breakfast. We leave you with the picks of our bullseye contestants for this week.
My first pick is Dabur. I buy it with a day target of 365 and a stop loss of 345. Second, HCC. I buy it with a day target of 48 and a stop loss of 37. Third, BEL. I buy it with a day target of 195 and a stop loss of 182. Last, Tata Power. I buy it with a day target of 98 and a stop loss of 87.
First one is long call on Team Lease with stop loss at 2320, target price of 2600. Second is long call on Future Consumer with stop loss at 75, target price of 83. Third one is long call on Shriram EPC with stop loss at 28.75, target price of 34. Fourth and final is long call on Network 18 with stop loss at 59, target price of 65 rupees for the day.
Today's first call is a buy call in Bharat Forge with stop loss below 717 for target of 750. My second pick is a buy call in All Cargo with stop loss below 188 for target of 215. My third pick is a buy call in Brigade with stop loss below 311 for target of 342. And my last call is a buy call in Kenfin Homes with stop loss below 482 for target of 530.